thank you all for joining us for the latest webinar in our Duties and Risks for Practice Owners series. We understand that good governance skills are not just for practice owners and directors, which is why we've created a separate series for your practice managers and admin teams. The next webinar in the series is next Thursday on business continuity planning for practice shutdown. We encourage you to get your teams to register for these events, so together you can create a safer, more compliant and successful practice. We've had yet another overwhelming response to the webinar, so it's clearly a topic of much interest, and we have a fabulous panel with us this evening who will be addressing some of the many questions which have come through the registration, which we thank you for. Please note that the information given tonight is general. However, if you do require specific personal advice, we as always invite you to call our medical legal advisory line. So let's get started. Welcome to tonight's webinar on assessing financial performance for practice owners. In the spirit of reconciliation, Avant acknowledges the traditional custodians of country throughout Australia and their connections to land, sea, and community. We pay our respects to their elders, past and present, and extend that respect to all Aboriginal and Torres Strait Islander peoples today. On our panel joining us tonight is Stuart, a partner at Cutcher Neale's Specialist Medical Services Division. Stuart provides specialised accounting and financial services to medical and dental professionals and specialist advisory services to private clients and businesses. Stuart's holistic approach allows him to consider many aspects of clients' finances, including their practice, business arrangements, investment strategies, and retirement planning, including superannuation and family circumstances. Stuart is a regular presenter of training programs for professional organisations, including the AMA, the AAPM, and many other associations and medical colleges. Next on the panel, we have David, who is the Managing Director at Hoxton MPM, which Avant do actually have a stake in, and the Neurology Network. David is a practicing neurologist and the founder of Australia's largest private neurology practice. Having designed scalable, efficient administration processes that are central to the operation of all medical practices, following on from the success of his neurology business, David established Hoxton Medical Practice Management, a national organisation that supports more than 400 doctors each year through a range of outsourced practice management services, virtual secretaries, and software platforms. Next up on the panel, we have Julie Berry. Julie is the technical specialist at Doctors Wealth Management. Julie works very closely with financial advisors to assist them in delivering high quality financial services as financial advice to Avant Mutual members. She is an independent director on several firm boards within Count Plus Group and the chair of Future 2 Foundation, the charitable foundation of the Financial Planning Association of Australia. Julie is a recipient of the Money Management Lifetime Achievement Award and is a graduate of the Australian Institute of Company Directors. I'll now hand you over to Julie.
Thank you and welcome everybody, and thanks for joining us this evening. Late as it is, I hope you've all got something to eat in front of you so that you can enjoy your dinner and you can enjoy information as well. So really this came about because as a medical professional, we know that you often find yourself focusing on looking after others, and that can lead to less focus on looking after your own business affairs. So tonight what we want to do is talk through some financial matters to consider once you've decided to become a business owner and run your own practice, or even if you're thinking about it. And what's important is whether your business is big or small, and no matter what structure you choose, the principles we discussed today will apply. So the first thing we wanted to do was just put a quick poll question to you. And our question is, why do you want to own your own practice? So there's three answers there that might be relevant to you, which is to make more revenue, some flexibility. Perhaps you want to be the boss and have some independence and choose your own hours, or maybe you just simply want to be a business owner. Okay, I don't think, David and Stuart, that that's particularly surprising, really, that the main thing would be flexibility and independence and essentially running your own race. Does that come to a surprise to either of you?
No, that's pretty much what we're expecting for me anyway.
It's about maintaining independence often, right?
Yeah, absolutely. It's all about making sure you're the master of your own destiny, isn't it? Okay, so what we're going to start with tonight is we're going to start about talking about financial success and how can we define that? So what is financial success? What are the base metrics you need to look at when you're determining whether or not you're having a business that is successful? And how can you assess your financial performance? So I'm just going to throw to Stuart first. And Stuart, you know, maybe you'd like to talk about defining it and the key indicators that you look for in your role.
Yeah, thanks, Julie. It's going to be very different for everybody, but I certainly approach it from my client's perspective, the medical practices we look at. And it was that second poll question, having the freedom or the flexibility to be able to choose when you want to practice in your own rooms and not have to be there to actually cover the costs all the time. So you can operate in an organization and in your own practice where it isn't reliant upon you, the owner of the practice, to cover the costs. You would have, for example, other associate doctors paying service fees in, etc. So those financially successful practices, there's some common themes about them. They certainly, practice owners have some clarity about the structures, which have a major bearing upon one of the biggest costs of being in practice, which is tax. And in terms of the metrics, obviously one of the really easy things to do, and we want to give everyone some really good practical things to consider, is understanding your profit and loss statement. So in terms of metrics, I just jotted a couple down here. I think of it from a profit and loss expensive perspective. I think about the income side of things, and I also think about the expense side of things. Really, we should be focused more on the income. Perhaps that's the number of doctors. Obviously, the number of doctors drives gross medical fees, and that drives a lot of the financial viability and the activity around the practice. Things such as average consult time, average fee per consult, number of consults, etc. On the expense side, on the other side of the profit and loss statement, you would be looking at your cost drivers. Two biggest costs: salary and wages and rent, aside from tax.
David, do you have any thoughts you'd like to add?
Yeah, so thinking about defining financial success really probably is one of the starting points of deciding to take the step to become independent and look after your own business and be a practice owner. So I think a quarter of people said they wanted to increase revenue by owning a practice. That's a fair comment. Just becoming independent is not a business goal in itself. And, if we at the start of the talk here, we're talking about how are people setting up their businesses. A business has to be set with strategy. So even before one takes the first step to become independent as a practice owner and choose when they like to work, they have to have a reason for making the business and define that reason and set a strategy to achieve that goal. Now, the goal may be to work just 2 sessions a week and have everyone else pay for the room, so that's fine, but it has to be agreed upon, at least internally, if someone's going to start up a business. And it's around those strategies that we can then assess the success, financial or otherwise. And so I often reference the Macquarie white paper that came out a couple of years ago that asked practice owners what their biggest hassle was. And it came out as a question from this webinar before tonight from the emails, that how do you keep a practice afloat? And so that independence does come at a cost, and we can minimize the risk by having a financial strategy and assessing the financial risk along the way. Profit isn't a dirty word, and doctors should be aiming for a business to make profit. It's not just to pay for itself. You're going to have the hassle and risk of a business. You need to make a profit, and to have set a level for what success is means you need to define what profit you want to make. So that's really important when I speak to people starting up their businesses. And just to round up this part of the conversation, Julie, one of the questions was, what are the key metrics that you measure? For me, when I'm working with business owners to make their practice better, I like to encourage them to set some pretty simple and transferable metrics. Room occupancy is one, revenue per hour is another, the staff to doctor ratio is the fourth, the happiness of the staff and the doctors is the fourth, and the 30-day debtors.
That's very interesting. I think a lot of times we do really focus on the financial side. I think another thing that is going to lead to your financial success outcome is your succession plan as well. And how does your succession plan look? And we might look at that a little bit later. You might be successful while you're in the practice, but do you also want to have something that's, scalable and sellable in the future? And we can touch on that a little bit as we go through. So if we've determined what financial success looks like, how often then should practice owners be looking at the key metrics that they put in place, even if they are around those ones you've suggested? And what would red flags look like? So I might throw to you first, Stuart. How often do you think people should review their metrics?
You really should be looking at as often as you can, but the challenge is actually getting that information on what information to look at. If it's not readily at hand and it takes a lot of effort to actually generate the reports or generate the metrics that you're supposed to look at, you're less inclined to do it. So I guess at a bare minimum, you might be looking at your metrics, for example, the profit and loss statement and some of the underlying metrics that drive the items in the profit and loss statement, for example, revenue per hour, average consult fee, etc., at least on a quarterly basis. And I say that because Most practices will have to do a business activity statement at least on a quarterly basis, which requires some form of reconciliation in terms of their bookkeeping process. So it segues nicely in with that. And it means that the practice owners don't have to do a lot of extra work. We'd be encouraging the practice owners to adopt as much technology or adopt as many efficient systems as possible so that those reports can get sort of auto-generated for you. So Xero is an accounting program we typically recommend to all of our clients, open source platform, lots of additional add-ons, etc. And you can interrogate the information in there, the financial information, to form some metrics or pick some key indicators that are relevant to your practice, because each practice is going to be slightly different. Like David mentioned, there's different objectives each time. The financial information is easily interrogated through something like a Xero, but I guess there's also some of the patient or the qualitative metrics, so the number of consults, etc., which you might take out of your billing program, etc. So there are some platforms out there which can interrogate that, identify item number trends and those sorts of things as well. So the simple answer is as often as possible, but at least on a quarterly basis.
Yeah, and just before I throw to David, I think if you look at the intangibles, and I know David's going to touch a little bit on this, so not to steal your thunder there, David, but depending on the size of your practice, it's not unreasonable to think that you should be doing some sort of, work health and safety survey of your team as well, to make sure that you've got them all on track and you're meeting your whatever your goals you might have set for. I think David mentioned staff happiness or just happiness generally of the team. There's nothing to say that you couldn't run an annual or a quarterly survey to that point either. And David, I might just throw to you on that one.
Well, I think Stuart and Julie both brought up what is actually dark clouds for doctors once they finish their training and want to become practice owners. What we're hearing is you've studied medicine, you've studied your area of expertise, you're ready to treat patients, but then you have to learn this whole new skill set. We're talking about governance here. Stuart's touched on running Xero, payroll. We're looking at staff engagement platforms. There's an endless amount that one could learn about business. And I guess what this series through Avant is to tool up people to know where they should go and what they should do to have the skills. In terms of assessing those metrics, I think from a simple perspective, a practice owner, and particularly if you're a doctor inside the practice, it's possible to have your finger on the pulse all of the time. And it wouldn't be unusual, and it'd be interesting to hear from the participants how many people sort of check their billing rate when they're actually in there seeing patients. At lunch break, they might see how much is billed for the day for the whole practice or how much they're billed for the last month. Certainly, I'm prone to doing that. I know a lot of doctors we work with keep an eye on things. So it's possible to keep your finger on the pulse for some things. The sake of keeping your finger a little bit on the pulse in an ad hoc way is that you miss out some of the structure that we're going to advocate tonight. So it's really important to have a structured way of reporting, and that should not be the responsibility of the practice owner. There should be someone within the practice who is tasked with organising reports for review and for action. And that will usually be the senior secretary or the practice manager. It may well be an external bookkeeper or an external business manager. But there needs to be a structure whereby there is a report to read at a certain periodicity. And it might be every second week if you're paying doctors every second week, or it might be every month. Certainly it's going to be every quarter for your BAS returns. And on those reports, you're going to look at things like we said before, the occupancy and the revenue and the expenses probably. It's really important to have a report on payroll so that you've got, as a business owner, some transparency about your compliance with employment rules and laws, and also to keep ahead of what's been a very changing landscape in terms of payroll responsibilities for employers. So I guess my answer is it's daunting, and it's tempting to keep your pulse and feel like you're informed, but it's better to set up a structure whereby the manager is providing reports to you as the practice owner, and you're reviewing those reports as frequently as is sensible. And if you don't know about what's happened in your practice in the last month, that is a red flag. That is cause for concern.
A question with that notice to both of you, because I thought you might like one at this time of the evening. Do you have a metric that speaks to salary as a percentage of income or revenue for medical practices? Is there kind of an industry standard on that at all?
A lot of the practices that I work will have a varying degree of a number of doctors at various different times. So it won't be, say, set 85% occupancy the whole week or the whole month. So it's more the ratio of staff to doctors, as long as there's a standard rate for staff. So I mentioned that as one of my key metrics, the staff to doctor ratio, and that can be adjusted according to almost hour by hour requirements in a doctor roster. So I'm a strong advocate of dynamic rostering that meets the needs of the practice, not meets just a sort of 9 to 5 standard roster. And we've got the ability to do that with rostering software these days. So for me, a staff to doctor ratio, in terms of a percentage cost for staff out of the overall billings, it could lie anywhere between 8% and kind of 19%, depending on how much billings are coming through.
It can even be higher in general practice land, with gross medical billings of the doctors being generally lower as a pure dollar number. I'd reinforce what David's saying in terms of that ratio of support or admin or to doctor ratio. So some of the benchmarking we've done across our client base and small projects we've done, those stronger financial practices tend to have a higher ratio around that 2 number, but they coincidentally have a bit more scale behind them as well, which is why, the number of doctors in the practice as well, which ties into the capacity. How much capacity does a practice have? How many rooms? How many sessions? How often are they utilized? The unutilized ones are the opportunity cost, the opportunity to generate more income. One metric, sorry, Julie and David, I thought of really briefly. One of our practices, slightly larger one, looks at staff turnover as a early indicator of, that happiness indicator from a staff perspective. So it doesn't have to be overly complicated, the metrics you're measuring. They just have to be relevant to your own practice. So they have to be tailored.
That could be a late indicator, I think, if we're looking at staff turnover, they've already left.
Yeah, that's a good point.
Or the trend.
But yeah, exactly. Most businesses would look at that. If you start to see a really high turnover, there's probably an underlying issue somewhere. We can talk about that all night. Okay, Stuart, back to you though. What kind of potential hidden liabilities should you be aware of as a business owner? So are there some things that aren't obvious, but things that you really need to be aware of on the liability side of things?
Yeah, there's a bit of both there. David's raised payroll as a hot topic at the moment. You certainly have additional responsibilities and obligations as a practice owner. You can't just walk away from it. It's all on you. In fact, as a director of a business that runs it, you're personally liable for superannuation, for example, if it's unpaid. So there's something, and that ties into the payroll. So you want to make sure you've got a payroll system which is robust. There's checks and balances. Staff, if they're doing timesheets, someone is checking that, be that the senior receptionist or the practice manager or the doctors themselves. Maybe not the doctors, not the best use of their time. So payroll things to check out, all the hourly rates are loadings or overtimes being correctly documented and calculated. So that leads into the potential liabilities that doctors may not be aware of, such as annual leave or long service leave. Particularly for practice owners who are buying into a practice, they will come on board, there'll be a part share of a practice. So they're actually partly liable for those liabilities that sit there. But, that liability didn't occur on their watch, as it were, and it might not be completely obvious to them. Some other things to think about as a practice owner are, particularly those who are joining a practice, is there a program to refresh some of the capital assets? They need to buy a whole bunch of new computers, or is there some new technology coming in because you're going to move the practice from a paper to a paperless practice? So what's the cost associated with that? If you're thinking about changing rooms, perhaps, moving location, you'll be, if you're not the owner of the property, you'll be leaving a lease. Are there make good provisions in there? Those make good provisions are basically an obligation to restore the building or the shell they often call it the warm shell, the shell back into the state that it was when the business moved in. So you might have to pay someone to rip out all the fittings inside, etc. So there might be hidden costs built in there. So the more you know about your practice, the better off you're going to be, so you can avoid some of those pitfalls.
So David, do you have any other comments to add to that?
Yeah, absolutely. I mean, there are 2 really, really important hidden liabilities that will impact every single practice owner on this call, and probably most practice owners. The first one is fraud. If you don't have your finger on the pulse, if you don't have engagement of your staff, and you don't have oversight of the financial handling, or at least have outsourced the financial oversight to an independent person, the risk of fraud is substantial in terms of the absolute amount of dollars that you can lose during the lifetime of your practice, and also the lost opportunity from that lost money. So I think fraud's a hidden liability that it's possible to completely overcome by having transparency across your systems. But perhaps something that will drain more money out of a practice is the cost of the business owner's time. Most doctors who start up a practice will spend way too much of their time doing administration tasks, doing background administration work that should be done by someone else at $30 an hour, not at a doctor's rate of, let's call it $250 an hour. So anytime a practice owner is doing administration staff that could be paid, administration activities that could be paid for someone else at $30 an hour, they're losing $200 an hour just from their time. And that is a liability that will stack up and build up over time, reducing quality of life, reducing the enjoyment of owning a practice, and actually having the opposite effect from what we saw in the first questionnaire. You don't get independence if you end up having to do the books, check people's results or letters, or review contracts or do payroll stuff, when that should be outsourced at $30 an hour and got rid of out of the in-tray. So those liabilities, I'm pretty keen on making sure doctors recognise that and address them early in their planning for a practice, so that they're not left with the can. They're not learning how to run a business. They're actually using people who do it cheaper, more efficiently and more accurately.
And that raises a really good point, because I don't think it matters what business you go into. You go into because you're good at something. So in this case, you're good at providing medical services to patients, and you can't be good at everything. And understanding what you're not good at is just as important as knowing what you are good at when you're doing this in a practice. Even if you're in a practice with others, you still need to be able to work out where your strengths and your value lie in relation to that business, I think.
I'm keen on making that part of strategy, so that there is a metric for quality of life of the practice owner. Am I doing the right thing? Am I enjoying running this practice? Can I reflect on what would make it better for me? And have a strategy to fix up things if things are getting out of hand, outsourcing the practice management, outsource the billing or the payroll or the bookkeeping to make sure it's done properly and not accumulating problems in the background.
If I could chip in there just to reinforce what David's saying there. So, I mean, if you just look at the opportunity cost, so a doctor, what they would charge on an hour for having their patients, or if it's a procedural type thing, if they spent that 1 hour doing administration work, you just look at that simple metric, that simple comparison there, where if they outsourced it, as David's suggesting, probably get done more efficiently, better if that person or that person or service is doing it all the time, which then frees up that 1 hour of doctor time to see patients, or maybe not, go for a game of golf or something, that other balance in there.
Yeah, I think, it's a question's been raised about, doing all things on your own generates more competence and interest. And I think the point is, understand all things, but you don't have to actually necessarily do all things. Certainly in my own business, I always made sure I knew how everything worked, and that if everybody fell off the bus, I could still run it on my own, albeit that I might not want to. But understanding all things and having to actually do all things, you've got to weigh that up on your strategy and your value, as we said. So look, I just want to move on to discuss billing. Maybe you could explain some of the complexities of billing. What should owners be aware of? How might we be able to make sure we're receiving what we're entitled to, and the impact that not receiving it might have on cash flow? And Stuart, I'll throw to you first if you want to take that on first.
Yeah, in terms of what you can and can't bill, obviously we're making the big assumption that everyone's billing what they're entitled to. So from my perspective, it's more just understanding what it is that you're billing. It's an education process. We have some GP practices where they talk about it, not in terms of trying to collude or anything like that, but it's an education piece. So they actually track the item numbers that have been billed. They look for trends. They look for opportunities where people maybe have provided a service which they haven't billed the right item number for. So you've provided that great service that the patient needed, but you haven't actually been rewarded or remunerated correctly for it. So keeping an eye on the billing reports, doing some, we've got some practices which in all the reporting, you want the reports to be nice and easy. So they use graphs and, line graphs, charts, etc., just to keep at a really high level and understanding of what's being billed. You obviously want to bill the extra items that you're entitled to. So in GP space, healthcare plans, we at Cutcher Neale sort of look at a growth formula. So one of the first three things is, billings is about generating some additional revenue. We've said it's not a dirty word. Revenue means there's more capital to be reinvested in the practice, etc. So, we're trending number of patients, we're looking at the number of times those patients return, and we're also looking at the average spend of those patients in the practice. So all of those are the metrics or the drivers that go into the billing, which is the revenue side of things as well. So there's some of the things we look at.
The billing formulas, the billing item numbers, and the billing reports are things that are very worthwhile practice owners getting to understand in detail. We've heard about some of the fine-tuning of GP practices. Equally, there's challenges in surgical and physician practices when inpatient work is charged at 23 or 24 different rates according to what different private insurer there is. And it's simple to, when you know what you're doing, to design a billing strategy so that you optimize the return for the surgeon or the physician who's billed the inpatient work, and also the rebate for the patient. And literally you can change from $499 out of pocket to $500 out of pocket and completely lose the goodwill of the patient, the referring doctor, and the insurer because you've gone outside of their zone of acceptable out-of-pocket fees. So my encouragement for non-GP specialist practice owners is to really understand in detail the item numbers that are used within the practice, review them, and make sure there's a conversation with the physicians and surgeons inside the practice. Speaking about GP practices, there is nothing wrong with educating your GP team about the right way to bill things, or the most efficient ways, or the spirit of the MBS, so that people are aware of the different item numbers that can be used, and tracking that over time is a good part of the feedback loop to see whether or not people are working well, billing correctly, and billing appropriately for the time and the number of patients coming through. I'm really keen on understanding billing for practice owners.
We have a question around GST for subcontractors versus employed doctors versus practice admin fees, and we might come to that when we talk about structures and the structures that are available, Stuart, when we get to that. You can just remember that. But given all the things that we've talked about so far, David, what level of resources do you think are required really at a minimum to properly manage a practice? And how do you juggle resourcing versus, and being financially viable, I suppose? Because there's been some comments coming through the chat where, yeah, it might be great to outsource, but it costs me more to outsource than potentially doing it myself.
Yeah, I think there's not one single answer that will fit every scenario, but if we think about the life cycle of a practice, hopefully starting off with a good idea and a good strategy, and then building towards a successful practice with a wide range of patients, and then building that to meet the goals. I think if you think about that pathway, across that, it's fair to say that if you can maximize your capabilities in your team and your operations, and maximize flexibility and minimize costs, then you're doing the right thing. So almost regardless of what the strategy is, maximizing flexibility and capability, minimizing cost, you're going to be a winner. So how do you do that? Well, staff are the biggest cost of a practice. Simply speaking, the number of dollars that go out to pay for staff are more than anything else in any practice. So you have to employ really well. And you have to employ to meet capabilities and maintain your flexibility as a business owner to meet the needs of the practice without costing too much. So choosing staff wisely, easier to say, hard to do, particularly in an environment where unemployment's somewhere around 4% and there's not many people looking for jobs. So does that mean getting an employment agency? No, not necessarily, but it doesn't mean employing or doing interviews and recruitment like a doctor who's never done an interview and never been through a recruitment process. You do need some expertise. You do need to be trained up if you're going to do it yourself, or do bring in some external help to recruit well. Set up your contracts well to maintain the flexibility, and try and choose people that have the attributes that you really need for success. And if I can make it a point on that, there's a temptation to choose your first secretary or second secretary because they've worked on the same medical practice software that you're using. That's a bad way to recruit people. You want to recruit people that are capable, demonstrated skills in the past, and are going to positively add to the practice. If they can't learn the software, then they're the wrong recruit. Any good recruit will learn the software. So recruit for capability would be the first point.
Can I just say, I'm a big believer in you should recruit for attitude and train the skill. You really need to make sure that the person you're recruiting is the right fit for you culturally, that they're going to be someone you can work with and that you think will work with the type of patients you expect to see. So I've always believed skills can be taught, attitude can't, and it's really worth thinking about that when you are recruiting.
Yeah, look, that's a super point. And if someone can't learn what you're teaching them, then you've made a poor choice anyway. but you can't teach someone's manners. I guess the next point I wanted to make in terms of the resources to properly manage and help achieve the financial success is management. So management in general, in my view, is the most underutilized skill in practice, in medical practices. If you optimize management, then you get the best out of the resources you got. You maintain your flexibility and you minimize your cost. So I would ask the practice owners here and the potential practice owners that are joining the call here, if you're not managing the manager, who is? If you're not managing and setting the culture, who is? And if you can't do it, then you need to bring in expertise to help you manage those people, to save the costs, to maximize the capabilities and maximize the flexibility. So around that comes the strategy, the organizational structure, and the financial handling. Those things need to be in place. And how do you do that? Well, you write a set of rules. And a set of rules for the practice in GP land is often called the Policies and Procedures Manual. That applies also to other specialist practices. And I'm a big believer in having them written down and accessible. We recommend Practice Hub all of the time, because Practice Hub, which is a cloud-based policies and procedure manual that Avant run, is available on the desktop for staff to use all the time, for doctors to look at, and it provides the rule book around which you can influence the management of the practice. So management using those sort of tools is really important part of getting things set up for success. We've already mentioned it, but I'll say it again, bookkeeper and payroll. Unless your practice manager or secretary is a trained bookkeeper or has run payroll in the past, please outsource that. That is going to minimize your chance of making mistakes, and it's going to maximize the chance of the practice manager and secretaries doing a really good job at the front desk where they should be working. Lastly, before I finish on this topic, I reckon there has to be regular management meetings with the practice owner. If you're not meeting to discuss these issues in a regular way, or just ad hoc discussions in the hallway, then the practice is not bound for success. You need to have a structure for reporting, like we said, looking at the metrics before, but also talking about this management input to keep that cost down, to keep the flexibility and capability updated. And if you're going to have a flexible resource, you're going to look at outsourcing stuff like business management, like bookkeeper, like payroll, or using a call overflow reception service so that you don't have to employ more staff just to answer a whole lot more calls because there's all these phone calls coming through, but actually get someone else to answer the phones for a couple of hours a day. So thinking about that whole scope of keeping the capabilities and the flexibility up there and the cost down requires management and thinking about those external sources.
Yeah, and it's good to note that Practice Hub actually are running a webinar program for practice managers not in the not too distant future, and I'm sure that information will be sent out in the pack afterwards as well, because you're quite right, it is very essential that you do that. And one of the doctors that's with us tonight just pointed out there's an accreditation requirement to have regular practice meetings anyway. So if you can make them more efficient and cover more appropriate items, it's only going to be better for everybody. So let's look at something that's really important now. This comes up a lot with a lot of us for questions from doctors all the time, which is around your business structure. And a question has risen about this as we said earlier, that I'm sure Stuart's remembered. When it comes to which business structure best suits your circumstances and helps you achieve your goals, it's a very difficult and a very important decision. And I think it's also a fluid decision in some cases. You might start in one place and move on somewhere else as your capabilities or your business desires change. But Stuart, perhaps you could just speak the next little while around some of the pros and cons of a couple of the options, around sole traders, companies, trusts, that kind of thing.
Thank you very much. We've got a slide for that. So 2 things that we always think about before you select a structure, and you've got to be really careful jumping into a structure because that's what your senior fellow has commented on. So, Stuart, you should set up a company structure because that's what the structure I'm using. It goes to what you said, Julie, that it's a fluid situation. So what was appropriate back then may not be appropriate now because the rules have changed and or the objective is different from each practice to each practice. But certainly I think of it along a couple of ways. So there's stage 1, there's stage 2, and there's stage 3. But what we've got on screen for you now are the typical entities, the buckets is what I call them, that doctors will consider when they're setting up a practice. So the first one there's the sole trader. And I'm just going to pick a couple of things to think about there. Probably the top 2 lines. from a complexity perspective, because there's no point being in a structure which is, fantastic, but really complicated and doesn't actually achieve a commercial outcome for you. Is it really in your best interest to be in that structure? Sole traders, advantage, it's really nice and simple. Downside is that, it's not necessarily the most tax effective vehicle. So this is going to be a situation, someone who's newly fellowed, they're, going out there, and, working in someone else's rooms. They might be paying a service fee. I know that's one of the questions. The service fee might be 35%. In Sydney, I will speak to, in general practice, generally anywhere from 30 to 35 or even lower. Okay. And I know that's one of the questions we've got there. Specialists, service fee percentage really ranges depending on the type of specialty. So, ophthalmology can be as high as 50. Dental, I know we're not talking dental right now, but it's 60% service fee. So the doctors keep 40. And the real reason behind that is because it's so capital intensive. The cost of the equipment is very expensive, and that's sort of the going rate. So you've got the doctor there where they don't have their own rooms, they don't have their own staff. So typically they will be in a sole trader arrangement. One of the other downsides of that is asset protection. It's fairly low because you don't have any ring fences around you. It's just a doctor, which is why we always think, should a doctor own a capital appreciating asset? Most of our doctors do not, from an asset protection perspective. Partnerships, we don't see very many partnership structures for the simple reason in terms of asset protection, because you're jointly and severally liable if you look at that limited liability column there. So basically, if you're in a partnership with another doctor, a true partnership, you can be liable for the actions of the other doctor, which is not really the situation you want to be in. We don't actually have any partnerships in our client base at Cutcher Neale anymore. Then you have a company structure. So company structures were quite prevalent in the past. They're not as relevant anymore, simply, and one of the real reasons is because the rules around superannuation changed. So in the past, you had to have a company structure. The doctor had to be an employee of a company structure for the doctor to get a full tax deduction for super. So the rules, as everyone would know now, is that you can put a certain amount into super and get a tax deduction for it, but that wasn't the case back then. And there's also some rules that from the 1980s you have to be aware of, that a lot of people say use the company because of the company tax rate, 30 cents in the dollar at the maximum compared to 47 cents. You want to access that lower tax rate, but you have to be really careful because there are some rules that say that if it's just one doctor in the company, no employed doctors and no other infrastructure, that you can't actually retain any profit in that company. So that means everything gets paid out to the doctor. So you end up back at the doctor's tax rate, like a sole trader, at 47%. So the last two, trust structures. So they provide a lot of flexibility in terms of the ability to distribute income around the place. So unit trust structures, particularly when you have multiple owners, a family trust structure or a discretionary trust when it's just the one. So it might be the situation David's referring to. You have specialists. We normally have in stage one, the doctor on the left-hand side, they pay a service fee, either on a percentage or a markup of cost to the service entity. That entity, that vehicle there in the middle, is typically a trust or a company structure of some sort, which is stage two, salary and wages, you've got staff and you've got rent. Stage three may be where you buy your own room. So you're thinking about perhaps superannuation structures at that point in time.
No, it's a very complex area, and it's you did well to get through that much in that period of time. So thank you very much for that. We're looking at governance today, a lot of it around financial, but we're also looking at what your personal duties and responsibilities and obligations might be, and as a practice owner, how you can meet them. So, your medical practice has business needs like any other business, and it has rules and values that it needs to have in place to protect your interests as an owner. Governance and proper governance in your business, though, it offers you more than just protection. I think David's really commented on this because it can promote a successful and healthy workplace as well. If you've got clear human resource policies in place that your staff know what's expected of them, what reward they'll receive for what they do, and you talk to them regularly about how they're feeling about that, that is going to protect you as a business owner and make your business a better place. If your business is set up as a company, which as Stuart's just said is quite common now and probably becoming more and more common, and you're a director of that company, also very common, you also have additional legal responsibilities, and they're prescribed in the Corporations Act, and you need to make sure that you're really across those from a governance perspective. But even if you're not a company, it is prudent to ensure you consider some of the same governance matters to ensure your business is robust and that you have good policies and procedures in place. Some of the matters that are usually covered by governance would include the quality of your financial accounting and reporting. And we've talked about that a lot. And we've talked about having it done and having systems in place and Xero and other options that are available. But it does include the proper storage of that information and making sure it's confidential and secure. You should also make sure, as we've said many times, that you're personally up to date with what your business or your company is doing. And that does include its financial position. And you should be fully informed about your business's financial position and performance, and particularly to ensuring that the business can pay its debts on time. And keeping your finger on the pulse, as we've talked about during the course of the evening, is really important when it comes to that. And I think Stuart raised earlier that a company is usually responsible for payment of debts, but a director can become personally liable as well, and particularly for unpaid superannuation. And that's really quite frowned upon, because unpaid superannuation is not paying someone else the money that they're owed for working in your environment. Having a business budget, which we haven't really had time to talk about, is essential, and then monitoring your performance against that budget that you've set is also important. That means you can manage your business and look at the key elements of revenue and expenses and your growth potential against targets. Quality of patient care, staff performance, and how you'll achieve your business goals are all things that you might have in your strategic business plan. And I think oftentimes when we go into business, we're so focused on delivering that patient care that we forget we're a business. And we're there to deliver, an outcome for you as the business provider or the service provider as well. Maintenance of a sound system of risk management is really important as well, and the internal controls that you have are essential. Practice Hub can provide access to a risk register, and you can use that to identify, manage and control any risks that might be applicable to your business, and you need to update that regularly. Risks might be even as simple as competition. Maybe there's a doctor of the same specialty as you that's going to open down the road, and what impact might that have on your business? That's a business risk, and those sorts of things need to be included as well. Interestingly, if you are a director of a company, you have to make sure that you don't have a material interest in any decisions made for the business, and ensure the decisions are always made in your company's best interest. But, that can be a bit of a conflict sometimes, but you might say, well, it's the same thing. If they're of my interest, they're of the company's interest, but you've got to be very comfortable that that's actually the case. And whilst it's not financial, it is essential you have a sound understanding of all the responsibilities you have for your employees. We have talked about PAYG, we have talked about paying the correct super guarantee charge. That changes, it has recently changed. I'm sure those of you using accountants or bookkeepers will be across that. But also make sure you're fully across any changes in awards. Some of the staff that you have will be paid under awards, and they are often increased by CPI, albeit that wouldn't be very much at the moment. You need to make sure that when that increase comes in, you are passing that on. Otherwise, that can be a significant amount of back pay you could owe to your staff. And I just want to go back to, we said you don't need to carry out all these tasks yourself. You can outsource these activities to specialists, but whether you're a director of your company, a sole proprietor or a partner, the buck stops with you. So it is incumbent on you to make sure that you understand all of these issues that we've talked about so far. And just before I hand over to David, I also wanted to mention something we haven't had time to speak very much about tonight, and that's cybersecurity. And, in this day and age where we all are on the internet and in the cloud or whatever, I don't really understand a lot of that myself, but cybersecurity is very, very important. Not only that you have policies and procedures in place to protect your information and your patient information, but also that you potentially have insurance against anybody actually accessing that information as well. So if that's something you haven't considered, you might want to consider having a think about that. David, I'll just throw over to you. Do you want to have a little chat about the practical aspect of setting up some of the reporting and meeting structures within the practice?
Yeah, I think, well, as a practice owner, being able to get on top of those responsibilities and duties does rely on other people to some extent. As we've advocated, we don't want a doctor owner or a practice owner doing everything. Simply they can't. Once you've got the strategy set out, which we've emphasised is a really important starting point, I think working with your practice manager or senior secretary to create the reports is an important first step or next step. And that, I think, a practice manager should be encouraged to independently get that data. They should be able to interpret and get data presented to you as a practice owner or practice principal, and giving them independence and training on how to get that data, work on it, interpret, and make management decisions is helpful and can help you as a practice owner. So I think a bit of advice here is to get the practice managers skilled up, do some training. I saw a question come through before about do training courses for practice managers or courses from the AAPM make sense for practice managers. You should be training all of your employees. For professional development, you should be providing training for all employees, and especially someone as important as a senior secretary or practice manager. So tooling them up to get the reports for you and understanding the metrics yourself as a practice manager is really important. But how else do you get that expertise and capability if it's not already present in your practice? Bring an external business manager in. Ask your accountant to help out with some of the understanding, or bring in an organisation like Hoxton that provides business practice management for practice owners. Just bring in that pay-per-use capability to help you set the strategy and understand help the business run more like a business rather than a place where you see patients, because you have to think of that as the business owner. So tool up your practice manager and get external help where you don't have the internal capabilities. There'll be a link sent about a little bit about how practice business management helps as well.
Yeah, no, and you're quite right. You don't have to do it all yourself. And I know we talked earlier about it's good to understand it all yourself. And I have said the buck stops with you, and particularly in relation to your financials and your ability to pay debts when they fall due and that kind of thing. Probably the level of patient care and the outcome you're trying to get from that. That's probably more on your side. But yeah, there's a lot of help out there for you in relation to all the other things that you need to do as well. So I think we've addressed most of the questions as they've come through, and any we haven't got to, we certainly can get to later on. But I just wanted to ask you guys, Stuart, I'll put you on the spot first. Do you have any final key points that you'd like to put on the table for our doctors tonight?
It can seem overwhelming, I guess, in terms of being a practice owner with all these responsibilities, etc. I guess it's important not to lose sight of that. It can also be rewarding, as David, I'm sure, will attest to personally, and also it can be rewarding from a financial perspective. Obviously, not without hard work. I would encourage those practice owners to have an understanding of the structure that they're in. What was it set up for? The objective. Certainly understand the drivers of their business, and maybe select a few key indicators or a few key metrics. Don't do too many because you'll get lost in them. So maybe it's 3 or 4, and regularly review those indicators. You can chop and change those over a period of time, but the idea is to identify a trend, as it were, so that you can, if you can't measure it, you can't improve it, I guess is a lot of what we're saying tonight. So don't overcomplicate it, but certainly arm yourself with enough information to set your path on a strategy, but don't be afraid to make a mistake and change strategy or change tact, as everyone likes to take now, pivot over the last 18 months. So that would be my suggestion.
No, very good points. Thank you, Stuart. David, to you.
Well, my advice, once everyone's got their strategy in place and know where they're going, is to maintain the flexibility. Don't put all your eggs in one basket by employing the world's greatest practice manager or the world's greatest secretary and expect that person's going to solve a lack of capability that you or the team have. Make sure that you use external expertise where it's needed in right amounts to maintain that flexibility, reduce your costs, and have the practice on track all of the time. I think there's probably more mistakes made by not looking than doing something and doing it incorrectly. You need to look under the stones. You need to know what's happening in the practice. So that visibility is really important. And by having that as part of the way you run the practice, makes it much more likely you're going to succeed and make the right decisions along the way. And that's where some expertise, external independent eyes can help along the way. The great thing about medicine in Australia is it's underwritten by the government. So you're always going to have some money coming through as long as you've got a few patients. The question is making the most of it to achieve the goals you want, whether that's purely financial, whether it's independence or some other strategy.
Yeah, no,
that's fun.
Yeah, they're all really, really, really good points. And I think at a time when our medical fraternity are really under the pump, no matter what specialty or what general practice you might be in, everybody really appreciates all you're doing, but being so focused on the care you're providing can often mean that you put your business and your business outcomes second. And I think what we're saying is you really can't afford to do that in the long term for yourself. Avant has got Practice Hub that has a lot of tools, as David said previously, that you can access from a business point of view. But whilst we focused on your business a lot tonight, we also have at Avant Doctors Wealth Management, and our services provide personal financial advice for doctors in all stages of their career journey. And we focus on your personal and financial goals and objectives. And if you want an appointment to talk about where you're heading personally as well, you can do that online. But I think the important message overall is, you know, you're better to know than not to know. If you know, you can go and seek professional assistance to rectify or improve things. If you don't know, it can come around and bite you. And from a governance perspective, if you're the owner, the partner, the director, the sole trader, it's all on you to try and get it right. So do seek out the help that you might need. And on that note, I don't think there's anything else that we need to touch on tonight. And I want to thank you very, very much for spending the time to come and talk to us. So thank you, David, for your time. Very much appreciated. Some excellent words of wisdom. Stuart, for your knowledge and your insights as well. And I look forward to seeing you all next time that we have a webinar. Thanks again.